Hello, everyone. Thank you so much for coming to this very special live stream. Today, I have a special guest. His name is Jeb Smith. You might have heard of him. He is a YouTube real estate agent from Southern California, and he has been doing real estate for the past 20 years. So he knows his stuff. He's been through the last market crash, and we are going to jump right into it with the first question being, Jeb, do you think right now is a good time to buy a home?
Wow, we're starting off big. Got some supporters in the chat. I see this is good. So I think it's an okay time to buy a house. I'm not using the word good. Good it's relative. It could be a good time for you if it's the right time in your life, and that's the one thing I stress when asking this question. And I'm not trying to deflect the question. It can be a good time if you plan on being in the house for an extended period of time. What I mean by that is, prices are at peak levels. And I'm not saying we've reached the peak, and I'm not saying we haven't reached the peak, but we've seen prices rise nearly 40% in 2 years. And so with prices rising that much in 2 years, at some point you've got to have a pullback in prices more towards the trend, right? We've got a trend going back nearly 70 years of home prices increasing around 4.5% on average. So when you have a 35-40% increase over a 2-year period, you're getting so far away from that trend that at some point it's got to trend back to that. And so if you have that shorter term time horizon, 2-3 years, you're trying to cash in, make some equity like your friend did, buy a property, sell it for more, buy something else. I don't think that's the right mindset. And I think that's how you can get caught in a bad position. So if you have that longer term time horizon, it allows you to withstand those bumps. And that's the one thing. So I think if you have that, it's a great time to purchase is what I'll say. I mean, I'm personally looking for real estate at the moment. I own a property. My wife and I, we need something bigger. I've been looking for the last year and a half. It's just not out there at the moment what we need. And it's likely to probably show up here in the next couple of months. And so we're in between doing an addition and or buying that property. And we actually had a conversation today. And to me, I'd rather buy the property if we can, but we also have that longer term time horizon, which allows any potential bumps.
So obviously you're in Southern California, and I did a quick little search on your market in Huntington Beach, and I see that inventory there is still extremely tight. However, I put out a video earlier today showcasing St. Petersburg, Florida, which basically was a very normal market for a very long time. Prices were pretty steady up until the pandemic. Things pretty much took off, had some pandemic pricing. Homes there have been very expensive for a while, but now we're seeing price cuts across the board in an area like that. So for you, as an example, you said you would be looking for a home right now. Would you buy in a market like that where you can actively see the home prices coming down?
I would, because I understand the market. I think long-term prices are going to continue to rise. I think, looking at the future of real estate, I don't see prices, and I've said this several times in videos, I don't see prices going back below 2019 numbers. For most markets. Now, real estate's local, right? So in St. Petersburg, for example, a market that I'm unfamiliar with entirely, you might see prices pull back. But here in Southern California, where I am, because of the amount of demand, because it's a desirable area, because there's a lack of being able to build additional properties, I don't see prices really pulling back that much. And therefore, I'm comfortable owning property that I'm comfortable buying property that I'm going to own long term. So the answer to your question is, yeah, I would be okay purchasing if it fit what I needed in a property and I was comfortable with the payment.
And you also don't mind paying the higher interest rates that we have right now?
I don't want to pay them. But at the end of the day, for me, it's about, is it the right time in my life? And I'm at a property just under 2,000 square feet with 3 growing boys, 10, 8, and 4 years old. My wife and I, we need more space. We don't have to have more space. It's just, I'm comfortable doing it financially. Fortunately, I'm in a position to be able to afford it. So that's, you got to take all that stuff into account if you're planning on making that decision. I don't think you need to stretch yourself to buy a house in this market, but if it's the right house, right price, you're comfortable with it, comfortable with the payment, I'm okay.
Gotcha. Okay. Well, it's good to know your position on that. I personally am a little bit more bearish on housing in general. I recently bought a condo here in Miami as my primary residence, but I pretty much paid 2018 prices for it, and I got a pretty good interest rate. I got locked in right before the rates had gone up significantly. So I got pretty lucky in that sense. But honestly, if I were looking to buy right now at this moment, I would be second guessing it, mainly because of that extra interest payment and how prices have just gone up. I'm not really sure if it would continue to be worth it. However, part of my analysis in that was the fact that rents have gone up so much here because in Miami, for example, used to be an area where it was always cheaper to rent for the most part than it
Yep.
was to own. And only recently that kind of has flipped. So that was part of my decision to buy. But if it wasn't for that like perfect scenario, so to speak, lining up, I probably wouldn't have bought. I would probably still be sitting on the sidelines. So in that sense, we are a little bit different.
No, I mean, and the one thing I'll say is your market is a little bit different than mine, right? So I'm in Orange County, with 3.3 million people here in Orange County. And as of yesterday, we had 2,300 active properties on the market. So, in a normal market, like normal being 2019 prior, this time of year, we'd have about 4,000 on the market. So we're well below the normal, inventory levels here locally. And in Huntington Beach, where I'm located, where I want to be, the only market I'm looking to purchase in, we had 146 yesterday. So
Right.
we're still well below where we need to be with regards to inventory. And part of the reason I'm comfortable buying is because even with inventory rising, I don't see us getting back to anywhere close to a balanced market just because I think too many people have locked in a super low interest rate. I mean, me personally, my primary home, I have a 2.99%. I'm never selling that property just because I can rent it out and probably make about $2,200 positive cash flow every single month just in that property alone. So that allows me to buy a more expensive property, maybe pay a little bit higher interest rate than I want to, and be able to transfer that $2,200 in rent essentially to what I'm paying on that new mortgage by paying a little bit more. I'm not happy about it, but I'm willing to do it. So it's a way of thinking. I mean, again, I'm not saying that prices can't go down. I think they will at some point. I just don't think they're going to crash, which is what a lot of people are expecting or
Yeah. Well,
wanting.
right. Exactly. A lot of people want to have a housing market crash at this point because I think a lot of people are just tired of, the bidding wars. They're tired of seeing homes selling for over asking price. And, now with these high interest rates, it's starting to feel like it's not worth it. And I can definitely identify with that. But you don't think there's going to be a housing market crash. Is that what you're telling me?
100%.
And why do you think that?
I just think the fundamentals of the market, there's nothing that points to a crash. I mean, if the fundamentals showed, the evidence of a crash, we've only had one crash in history, one real estate crash in history, and that was '08, and that was caused by, subprime loans, adjustable rates, people buying second homes, and something you mentioned earlier, which is very, very important. It was cheaper to rent in many places across the country at that point. And so people dumped their properties and thought, why the hell would I keep this property? I can just go rent something that's comparable for less money. You can't do that now. So people dumping their property, which most people have equity in them, so it doesn't make sense to do that, but it's just entirely different. You've got low supply, demand is still there. I mean, in your market, are you seeing people not purchasing homes? I would say probably not. Still, people are still buying, maybe not at the rate that they were, but demand hasn't dropped off entirely. And so with that, I think the market kind of continues to do its thing.
Yeah. Well, I do see sales still coming through, obviously, not at the rate that they were before. In fact, in 2021 was more of like the market for Miami when it came to home sales. Things have been kind of on the decline for the first part of 2022 here. We haven't been seeing as many sales, probably due to also because of the extremely high pricing. Miami has been traditionally known as one of these markets where people put properties on the market way above what they could probably get for it just to test it out and see if they're going to get it. And a lot of times they don't. So I think that's what's happening here in Miami anyways. But my theory for a housing market crash is this. If we get hit with a recession, which is looking more and more likely in the next few months, then of course there's a snowball effect the stock market could take a hit. It's already been taking a beating since the beginning of the year. Companies could start doing more and more layoffs, which we're already hearing about. And then even these most qualified buyers who recently got into a home, they might not be able to afford their payment, especially if they were one of these people that decided to go with one of these beautiful ARM mortgages. So I don't feel too hopeful for those folks, unfortunately. And I feel like if that situation were to play out, then we could potentially see a crash. So what are your thoughts on that?
I disagree entirely. But I mean, I just have a different way of thinking. I mean, typically speaking, historically speaking, you get a recession. What happens to interest rates? The Fed starts lowering the Fed funds rate again, right, to support business, to help stimulate the economy, all of that good stuff, right? So with that, interest rates are going to go down. In fact, historically speaking, when the Fed started raising the Fed funds rate, interest rates have gone down. We haven't seen that at the moment just because there's so much volatility in the market with the balance sheet runoffs and, the Fed raising the Fed funds rate. Are they actually going to follow through? There's people that believe they are, and there's people that believe that the Fed doesn't have the chutzpah to actually do what they say they're going to do. And so I think people are waiting to see how it plays out, and that's going to reflect in the volatility in rates. And that's why we're seeing, hell, we saw the best improvement we've seen in 2 weeks today. And for no really apparent reason other than, people, I guess, felt okay about what's happening with regards to the inflation numbers after things have settled down or what have you. But I think a recession, yeah, I mean, the economy slows, but I think the Fed will probably try to stimulate the economy some, which is there's a chance that interest rates go down at that point. But most people have 30-year fixed mortgages, okay? And if you're like me, super comfortable with the payment. I don't really care what happens to housing, quite frankly. My payment is fixed. I'm not going anywhere. There's no, world in which I won't be able to make that payment. So I feel good. I feel like a lot of people have super low rates and are in a position where they're comfortable making that payment. And those that aren't have enough equity where they could sell, maybe not at top dollar, but they could sell and not have to have some sort of distress on that property. And therefore they're able to get out if they want to. Now, with regards to adjustable rates and all of that good stuff, most of them that are in the market at the moment that I'm familiar with aren't any shorter than, say, 5 years. So you got to have something that affects the market for longer than a 5-year period, at which point these people can't continue to make their payment. So, 5 years from now, hell, I don't know what's going to happen, right? I can only forecast what I think is going to happen in the next year, 18 months or so. And for the moment, I don't see anything that supports a crash.
Now, to your point about the Fed going back to lowering rates if a recession hits, I think that they're in a situation where that's a big problem, because if they do that, we already have spiking inflation that's nearing 10%. If they go back to lowering the rates instead of raising them like they said they would, then inflation could spiral completely out of control, which could put our economy into even further harm. So I feel like our government right now is in a situation where they need to decide, are we going to have maybe a mild recession, something that we can sort of control, or are we going to go back to dumping a bunch of money in the economy because people can't make payments, lowering interest rates, and then spiraling things out to a point where it just gets to become a disaster?
No, I mean, I agree with that. I mean, the Fed tried to basically do not what they're doing now, but they tried to do something similar in 2019 when they started hiking the Fed funds rate, or was it 2018? They started hiking the Fed funds rate, starting to try to let the balance sheet run off, and then realized real quickly, whoa, this is doing more harm than it is good, and basically retracted on everything and, whatever. So the Fed has a history of not following through. And I mean, obviously, inflation is one of their number one concerns, right? They have two: employment and inflation. And so I think they've got to do something with inflation. But if they were going to into a recession, in theory, inflation should, a recession is deflationary by nature. So a recession should bring deflation down in theory, which should allow, them to help stimulate the economy if they need to. But obviously there's a lot of ifs in there with supply chains and what's happening with, the pandemic and China and all of these other things. So I don't know, man. It's, all I can say is what I see at the moment. And I don't see a crash happening for those reasons.
I see. Well, what about in your local market? Are you seeing people still go over asking price on homes? I saw one of your recent videos and you said that things are starting to sit on the market a little bit longer. I know you said you have lower inventory there than previously, but what are you seeing happening there right now? Are people still desperate to buy a home? Like, what's happening in your area?
I think I think there's less desperate mindset of people buying property. I think people have the idea now that, you know, there's more inventory coming. They're seeing it. Some people are seeing, you know, there are some price drops in homes. So I think people are getting kind of an idea that, hey, listen, excuse me, you know, I don't need to go crazy in making offers. And I believe that. And I think you will see, I think some pockets will still get over asking. Some pockets will still get multiple offers and still have people do waive contingencies and that sort of thing. Like the community I live in, there are certain floor plans in there that are very, very, very desirable. They always sell at a premium. They always sell over asking. And when I say always, we're talking the last couple of years, even outside of like, you know, the super low supply times. Those homes are still going to do that because they're in high demand. But the homes that back to a freeway, the homes that back to a major street, the homes that aren't, you know, great, but have been selling at premiums over the last couple of years because of the lack of inventory, those homes are going to be affected the most. Those are the homes that are likely going to sell for less than the asking price, aren't going to have the multiple offers because buyers have more options. So I think it all depends, you know, on where you are here in Southern California. But again, some properties are going to have multiple offers, some aren't. It's just, you know, that's coming with more inventory and affordability.
So obviously, Southern California is a unique place. Like you said, people want to be there pretty much no matter what. But what do you think is going to happen in the future there? Say, for example, right now they're having another big water shortage there.
Yep.
So that can easily affect the quality of life in Southern California. Do you think this is going to have an impact on housing prices there?
I don't think so. I mean, again, people, I mean, I live in I mean, obviously the water shortage is going to affect me too. I'm not going to sell just because of the idea of a water shortage, at least at the moment. Now, we've never been in a time where it's been super desperate. You know, I've been here almost 20 years. Every year we have a drought, right? I don't know. I can't name the last time we didn't have a drought. So obviously there's drought issues. This time's a little bit more, you know, worse than other times, but you know, every year we have forest fires. Every couple years we have earthquakes. People are still here. So it's a desirable place to live for many reasons. The weather, the geography, you know, prices clearly aren't one, taxes aren't one, but I don't see people flooding the state just because of, you know, water issues unless they were planning to leave anyway.
Are you seeing people leaving California because of the taxes and the things that were happening there during the pandemic? Do you know people who went through that?
Oh, absolutely. Yeah. I mean, I had people leaving prior to the pandemic. I mean, on average, I mean, I don't sell a lot of real estate, right? Maybe 30, 35 homes a year. I'm an individual agent. And on average, prior to the pandemic, I would probably have, I don't know, 3, 4 leave the state every year, just for those reasons. Even back then, politics, taxes, whatever. Pandemic, you know, accelerated some of those people leaving. People retired early. People said, you know, they could work from home then. They no longer had to do that commute into the job that they, you know, that they now still have living out of state, but still work in California. So I think it gave people an opportunity to leave the state where otherwise they would have never had that opportunity. So, you know, the last 2 years, I've seen more people be able to leave and have taken advantage of it. But still, I mean, it equates to maybe, you know, 15, maybe 20% of my business. It's not like it's the majority by any means.
Gotcha. Okay. So let's circle back to something here we talked about a little bit ago. Let's talk about the mortgage rates for a minute.
Yep.
So what do you think is going to happen with the mortgage rates? There was a prediction back at the beginning of the year that we would be seeing around 5% interest rates by the end of the year. It's not even halfway through. We're seeing a lot of people getting rates already in the 6s. In fact, I had somebody comment on one of my videos saying that they got a 6.25% rate with an excellent credit score. I mean, where do you see rates going by the end of this year? Because in my opinion, I feel like it's going to keep going even higher. I think that it's going to be probably in the sevens, eights, possibly even more. What do you think?
I don't see that happening, but I was wrong. I didn't see rates this high. I mean, I made a prediction last year. I didn't think you would see rates this high. I didn't think the Fed, for one, I mean, we've always seen historically, and I say historically, going back the last 10 years or so, the spread between the 10-year treasury bond and the 30-year fixed has been about 1.75%, give or take. So that means if the 10-year has been trading at say 2, interest rates on the 30-year would be somewhere around 3.75. That's essentially what we've seen over the last 10 years or so. Well, I mean, and there's obviously been some occurrences where that's not the case. But recently, we're seeing it trade at somewhere around 2.3, 2.4% of where the 10-year is. So today, the 10-year is at just over 3%. So you're seeing interest rates, again, on average, somewhere around 5.3, 5.5% for a lot of borrowers out there. I didn't think that spread would change. And a lot of it has to do with the balance sheet runoff that's happening, and people are waiting to see what happens with regards to that. So I don't know. I don't really have a prediction in rates. I mean, where I think they're going to go. I mean, I personally think rates probably, on average, right? So we can't say, yeah, some people have gotten 6, but there are also people out there still getting 5. So on average, we'll say, the majority is probably 5.5% at the moment. I think you might get to a point where interest rates on the average are somewhere in the high 5s, but I think they peak somewhere in that area personally. But that's a guessing game because I've been wrong, and it's, nothing is following, none of it makes sense at the moment. So it'd be interesting to see how it plays out.
Yeah, for sure. I mean, I feel like it's going to continue to go higher. And going back to my point earlier about a potential recession, I think that if the rates continue to rise, and you said yourself a little bit ago that you think real estate prices might come down, but won't go back to pre-pandemic levels. So if that does happen, and the prices kind of just flatline to where they are right now, let's say we don't have a crash, but interest rates continue to tick up. Do you think people are still going to be jumping in line to buy homes? Because personally, I think that's going to really slow things down, mainly due to affordability.
Yeah, I mean, it depends on who you talk to, man. I mean, see, that's the thing is like you talk to somebody that's younger, that's never seen interest rates in the 5%, and they're completely shocked with the idea of having to pay 5.5%, or whatever the number is. You talk to somebody that's in their 50s, and where they've seen interest rates at 15, 18, 12%, whatever the number is, they look at it in a different, manner. They say, hey, listen, I bought my first house, it was 19%. Interest rates are still really cheap. Historically, money's still really cheap. And so I think it's a mindset for depending on who's buying it. And at the end of the day, it really comes down to price. I mean, not price, monthly payment versus price. If people can afford it monthly, if the payment makes sense to them, people are less concerned about the price. I mean, that's my experience, right? People, if you told me, you could buy $1 million house and it cost you, $5,000 a month. Do you really care? I mean, if you can afford the 5,000 and you were planning on spending 5,000 anyway, do you really care that it cost you $1 million? Or do you just care what your monthly payment is? I mean, I can tell you, I care more about the monthly payment. Obviously, I want to buy something less expensive. It's always better to get a lower value or a lower price house because you can pay it off quicker, pay the interest off quicker. But the majority of people don't do that. Majority of people live month to month with regards to how they pay their bills. And so that monthly payment is super important. So I think people looking at it, they look and say, hey, can I afford this? Yes, I can, or no, I can't. If they can't, they either pull back in price or they sit on the sidelines hoping for a crash. Or if you can afford it, you move on.
Right. Yeah, I think what's the problem is with people is if they go for a home that say today's prices and the interest rate is higher and they say, well, I can afford it, like you just said. However, if that happens, people kind of don't look at the long term. Like you said, you would be in the home for a long time, but a lot of people can't really predict how long they're going to be in a home. Typically, people move every 7 years, maybe 10.
The average tenure at the moment is 10 and a half years. Right. I mean, that's the latest data. So 10 and a half years people stay in homes. So It used to be 7, but on average, people are staying in 10. So again, 10 years flies by in the blink of an eye. I've been in my house 10 years. It seems crazy that I've been there 10 years, but it's gone by pretty quickly for me. I mean, I'm not one of those people that pick up and move very often, but I think if you are, then that's probably a reason not to buy.
Yeah. Well, that's the problem, because I think a lot of people just look at the payment, which was kind of my point that I was getting to. They look at the payment, say, yes, I can afford this. But if you bought at this price and say 5 years goes by and you do need to sell, so you have a job transfer, something happens, you could potentially lose a lot of money if prices go down. And those are the people that I'm kind of worried about right now. Just because, being in Miami, I went through the last housing market crash here. I just basically got my real estate license as it was happening. And I saw a lot of people lose their homes back then, pretty much in that same situation. It was a different market. I'm never going to say it's the same thing as 2008, because that's definitely not the case. We do not have the same situation here as 2008, but a lot of people could end up in trouble like they did in 2008, but for different reasons this time around. So that's my concern. I mean, didn't you go through something like that here in Miami? You said you had a property here
Yeah,
before.
I owned a property that I bought in 2003 or 2004, before it was ever built, in South Florida, in Miami. And I don't know what the closing price was. I think I paid $440 for it, was the number. And I ended up selling it. It was built, the construction was finished in 2006, maybe 5 or 6. And ended up selling it in 2009 or 10. I don't remember which year, for 165,000 or so. I mean, it lost a significant amount of money on that property at that time. I've been through it.
So what happened? Like, why did you end up selling it then? Like, what happened to you? Like, what's the lesson to be learned?
Here's the thing is I owned a rental property in Boise at the time. I owned some rental property in Lexington, Kentucky at the time. And, at the time, I mean, I was still making, fortunately, I had an opportunity to start selling REOs for Fannie Mae, Freddie Mac, and Wells Fargo, and all these guys. And I was still making money, but I was young. I was scared about the market at the time. I saw prices going down. All of the other properties were rented out. Miami was not rented out. Miami was a second home that I spent in, probably 2 weeks, a month out of. And I got scared. And so I ended up selling the property just to get out from underneath it and move on. And I have regrets, quite frankly. Not Miami. Miami's the only one I don't have regrets about, but the other two, I have regrets about selling them, because the rent actually covered the payment. And I was uncomfortable with the situation. I'd never been through anything like that before, and got scared. And so I ended up selling them, and look back today and wish I still had that house in Boise and the one in Lexington as well.
Yeah, that's one of the only ways we learn, is by making those mistakes. I mean, obviously, like you said, you were young. It was probably a mistake to sell that property, especially at that time. But I think the big takeaway that people can learn from your story, what happened, is that, when you see this happening, like say another crash does come, nobody knows, I think it will. Jeb thinks it won't. But if it does come and you're in that situation where you paid, today's prices, if you sell, you're going to be in trouble, and you might have those same regrets. So that's kind of one of the points I wanted to hit home on this live. And real quick, I just want to say thank you to Real Estate Mindset for the super chat. Thank you so much. Wanting to acknowledge that. So moving on. So as far as the housing market crash goes, I think that really the only way that this could happen is if there's a recession. But my concern is that if there is not a recession, and say somehow this magically keeps going forward, then people just won't be able to afford a home anymore in a lot of different places across the country. Because if this trend keeps continuing the way it has been, I just don't see it. I mean, people are not making the money to pay for homes in a lot of their markets, especially with the increases we've seen. So do you think that the price for housing now is like where it should be, in the sense that this is what the homes are really worth, or they're only really worth this much right now because of the supply and demand issue?
I mean, it's always going to be supply and demand with anything. I mean, take, real estate aside, it really falls into anything that, I mean, take the lumber, for example, right? Last year we had a shortage in supply, and lumber shot through the roof. Once supply balanced out, lumber prices came back down. So I think that is the case. Obviously, lumber is a little bit different than building houses, but, you know, I don't know. I mean, it's hard. I mean, there's definitely a disparity between those that own homes and those that don't. Those that own real estate, those that own equities, fared pretty well financially. I mean, aside from the pandemic and whatever happened with their employment during the pandemic, right? I mean, if you owned stock, if you owned real estate, you did fairly well financially. Those that didn't, the gap got wider. So there's a problem there. There's no question. Unfortunately, I just can't think of a solution that fixes the problem, within, a reasonable amount of time to fix the problem. Now, that doesn't mean real estate can't go down. It doesn't mean it can't go up. But if you look at real estate on a countrywide basis relative to, say, like Canada or some of these other places, I mean, I don't know if you read Housing Wire, but Logan Matashami just did an article on comparing us to 5 or 6 of the well-developed countries out there like Canada with housing, and United States home prices are significantly less compared to these other places. Now, I don't think we can go where Canada's gone, and I hope we never see that. But interest rates are obviously playing a factor into it, and I'm a believer that interest rates need to stay high. And what I mean by high, I mean, I don't like interest rates at 5.5% or 6%, right? Because I'm personally looking to buy property, so I don't like that. But I can tell you from a real estate agent that's been through this, that wants to see balance in the market, the longer interest rates stay high, the more supply is going to build over time and the more it's going to balance the market. That's the reality. And you need balance in the market. We haven't had balance in this market in a very, very long time. People look at me as a real estate agent and say, Jeb, you just want houses and prices to go up. That's how you make your money. Yeah, that's how I make my money. But let me tell you, if the market crashed, guess what I can do? I can buy properties and flip them. I can buy properties and rent them. I will make money regardless of the market that we're in. So I don't need house prices to go up forever to make money, but it's just not a good thing just because of it's unhealthy. It's unhealthy for those that own property, and it's really unhealthy for those that don't. So regardless of whether we see a recession or we don't, you need interest rates to stay at higher levels to allow more homes to come to help with that balance. But that doesn't solve the problem for those that, are already in affordability issues. I don't have a solution for that, Michael.
Yeah, well, that I'm definitely in agreement with you on. I do think that rates do need to remain high and possibly even go higher, especially with the inflation rate that we have right now. Like I said, my concern is affordability for people going forward if prices don't come down. But you just said that as more inventory builds, then the more we will become a balanced market. And I agree with that. My concern is this, they're saying that we have a shortage of 5 million homes in the US right now that need to be built. But I'm thinking to myself, like, wait a minute, how is there a shortage of homes considering before the pandemic, there was no shortage. In fact, we had probably one of the most balanced markets ever before the pandemic hit. And now all of a sudden there's a shortage. So my belief is that there's actually no shortage out there. I think that a lot of people are just in a good situation that selling doesn't make any sense. They have a payment they can afford, like you said, and they don't have an incentive to sell. But my concern is they're going to build these homes, and one day those people will sell. And then, we can go from having no inventory to way too much inventory, which I think could be another totally different scenario that could lead us to a housing market crash. What are your thoughts on that?
I mean, I'm going to disagree on the supply issue. I can't say we have 4 million or 5 million or 6 million or 2 million. I don't know the number. But coming out of the last housing crash, I mean, we kind of talked about this pre-show a little bit. You looked at, say, Miami, for example, and you looked at the number of condos that were being built. I was down there at the time, and everywhere you looked, there was a crane. And what that meant was, cranes in Miami were building high-rise condos. They were everywhere. I mean, literally everywhere. Everywhere you looked, it was a crane. And so there was an oversupply of homes built. At that time, we had around 12 and a half months of supply, a month of supply of homes, which is part of the problem, in addition to rents being, more affordable than owning property, which caused the debacle, along with, loans and all that good stuff. Well, that put restrictions on home builders to build homes. That started the process of less homes being built. Now, we can take this all the way back to like 19, I don't know, was it 78 or something? When, if you look at the chart, I have the chart, if you want me to pull it up here, where you can see the drop off in the number of births of those people being able to turn prime buying age. So there was a drop off in births at that time, and those people would be prime buying age of around 33 years old on average, about 2006. Okay, so you had less people being born that would be prime buying age at 33 years old in 2006. At the same time, there were more homes being built at that time. So you had less people being prime buying age and way more homes being built, which is another problem that happened then. Since then, the number of births have been increasing and more people are becoming prime buying age at a time when there's less homes being built. With that being said, that's part of the problem, is that you've got less homes being built, more people becoming prime buying age, becoming buyers, and they can't keep up with that, increase in I won't say people being born, but that's essentially what it is over time. And that if you look at the chart, the trend continues to rise through the Gen Y or whatever the hell comes after millennials through, the next 10 years or whatever it is. So I don't know. I think there's a lack of homes being built. I mean, you can see it here in Southern California. The cost to break ground in California is like $90,000 just to build a house, because of all the regulatory fees, all the crap you got to do to build a house. And so that puts builders going, okay, it's really got to make sense for me to do this, and builders for a long time didn't want to do it because of the market that we're in. Now they've seen the surge in demand and, everything go, out the window the last couple of years. And so builders are heavy into building. But the first thing that happens when a recession happens, guess who stops? Builders stop. And so if we do have a true lack of supply of homes being built, a recession is only going to slow that down, which is going to keep the problem moving for years to come.
That's an interesting point. I think that's also true. If there is a recession, builders are going to put things on a screeching halt. So that definitely can have an influence. But at the same time, if there's a recession, then a lot of people who maybe don't want to sell will be in a position where they need to sell and quickly come in to fill that inventory gap that would have normally been met by builders. So that's what I think would happen. Guys, start putting your questions in the chat, because we're just going to talk a few more minutes here about the market, and then I want to start answering some of your questions. So start putting some questions in there, and we will take them as they come. So in regards to the inventory that I see here in South Florida, for example, things have been going down just like they have in a lot of different areas. But I think here, for example, people are at the point where I don't think prices can really go much higher, because I don't think the demand is there for people moving to South Florida to pay more than where we're at right now. And Miami, I feel like, is in a unique position where we really don't have any buildable land left for the most part. So there really can't be a whole lot more building done in my area, not because of, permitting, like you're saying, it's not the lack of being able to get the ground broken. Here, it's more the problem of there's nowhere left to go. We have the ocean on one side and the other side is the Everglades, and everywhere else in between is pretty much maxed out. But like in areas where you live in Southern California, where they just make it difficult to build, I think that that's part of what keeps the prices there artificially higher than they should be. And I think a lot of people probably want it that way, right? I mean, that's part of the NIMBYism, that we hear about. People don't want, a ton of, affordable housing in their neighborhood because they like it the way it is right now.
Well, I mean, I could speak to that, right? So I'm in Huntington Beach, and so if you Google Huntington Beach and affordable housing, there'll be a couple articles that come up where basically the city of Huntington Beach is fighting affordable housing to some extent because the state mandates how much affordable housing you have to build in a certain period of time. And so, long story short, is that Huntington Beach has built a lot of housing that more affordable housing than any other city in Orange County. And I don't know if that's 100% accurate. We're in the top 2 or 3 of any other city that they're mandating there, but yet we're still being required to build the most. So the city's fighting back, basically saying we're not doing it. And it's not because of, hey, listen, we don't want affordable housing. It's not, it's an infrastructure problem. I can tell you living here, it's comes down to infrastructure. And they've built since the last boom and bust cycle of, '08 or whatever, took some years, but obviously building started coming back. And so they started building some more apartments, right? So high rise living in apartments. And what they've done is they've crowded streets that were already super busy with, 300, 400, 500, 1,000 units in some of these cases. And it's created traffic problems everywhere. And we're a beach town. And guess what happens when it's warm outside? People come in from everywhere. And it just adds more people to the city. And it's literally like a gridlock. And so people here don't want that. I mean, I can tell you, I don't want it. I think we need affordable housing, but I don't think, there needs to be a plan in place. You can't just say, you've got to build this many houses in 10 years or we're going to fine you. It's like, no, let's come up with a plan and be able to figure out how we do it. And that's the problem, is that it's being thrown in people's, faces that you've got to do something without a lack of planning to build the infrastructure and everything to go along with it. I mean, Huntington is a town that was built in the 20s, right? So back in the 20s, they weren't thinking that you needed 4-lane, 5-lane roads on some of these, streets that have people come in and out. Now, over the years, they've grown, but guess what? Businesses are literally built to the max going down these major streets, and it just creates problems. So it's not an affordable, because anything affordable here, it's all by median income. So it's not like people are going to look at it and go, they're moving the poor in. It's not that at all. That's not what people are worried about. It comes down to infrastructure.
Yeah, absolutely. Well, I think, obviously the US has a lot of land left. It's not like we have a shortage of land here. And there's areas in particular, like in the Midwest where I'm from, that didn't really fare so well in the last recession. And I feel like areas like that probably should be given a second look when it comes to the housing market, because let's face it, I mean, houses in those areas are still very affordable compared to somewhere like South Florida or Southern California. And I think that could be part of the solution. The thing is, how do you get people to move over to those areas that traditionally have been way less desirable? Because obviously there's the weather, that's a big factor in being there, and economic opportunity. So I feel like that could help the situation if we could find a way to make those areas more attractive again. But I think until that happens, then these really desirable areas are just going to be, in that situation like you just described.
Yeah. I mean, again, I mean, everybody wants to complain about supply, like in, say, our market, but if people wanted to be homeowners, there's markets where you can move. It may not be Huntington Beach. It may not even be Orange County. And I'm not saying you need to move out there to buy a house, but at some point, maybe, the threshold there, you just aren't going to be able to buy. So you have to explore other areas. And so I think, again, that's a whole different story that, to be considered. But I just think people are like stuck on, I have to live in this area, in this house, and it's unaffordable. Therefore, I'm never going to own a home. No, not necessarily. You can own a home, just might not be, what you've been thinking your entire life of owning a property is going to look like.
Right. All right. What do you think about getting into some questions?
Let's do it.
All right. We'll take the first one from Real Estate Mindset. Thanks for that super chat earlier. Are either of you warning your clients of the potential of a crash and being stuck in their homes for a while? Obviously, markets differ in reaction to raising rates.
I'm not. I'm definitely not talking about a crash. I'm more trying to educate my clients on what the market's doing. Kind of like the conversation we had at the beginning. Listen, why are you buying? How long do you plan on being here? you know, are you comfortable with the payments? And I don't really get into payments and all that stuff because that's, you know, the mortgage professional's job. It's more of me to guide them to the right property. Just make sure they're buying the right property that fits the future needs of them. I have to have clients that start out with me and say, hey, listen, you know, I want to own a, you know, a 2-bedroom, 2-bath because it's me and my wife and we're going to have a baby or whatever. And like, okay, 2-bedroom sounds good. But then they start looking and going, whoa, 2 bedrooms. I don't know if I can afford that. Maybe we look at like a loft or a 1-bedroom. Stop. Like immediately screw. Maybe now's not the time. Maybe, you know, you save a little bit more money. Maybe you can get a gift for a down payment, or maybe whatever the options are, but don't go backwards in your non-negotiables on a property to own property. I think that's a recipe for disaster, because what happens if you do have the kid and then you've got to sell in 2 to 3 years and home prices have pulled back some? So I think it's all about education and guiding people and helping them think the right things. But ultimately, you're not making the decision. You're just trying to provide a level of expertise that, you know, where they can make their own decision.
Yeah, absolutely. And I would give basically the same advice to clients of mine. And, you know, obviously I work in a much different market than you, and I saw the last crash here. I don't really advise people of a coming crash, at least for this area. And the only reason for that is because so many properties here in Miami have been purchased with cash over the past decade. A lot of these properties are not financed. So a lot of the current owners really don't have anything to lose, you know, given a recession, anything like that. And we don't have the overbuilding like we had in the past that you described either. So I think that prices in Miami in particular will stay fairly stable and weather a potential crash pretty well. But overall, in general, I always tell people, you know, you need to be paying attention to your local market. You know, if you see like this area in St. Petersburg that I mentioned earlier, if you see price cuts across the board, and you're looking at buying right now and you see things are starting to reverse, then yeah, I would say be very careful.
No, agreed.
All right, let's see. Let's take another one. Um, okay. Here's a good one. What percentage would you both consider a crash?
Percentage?
Like a percentage lost in value of a home.
Oh, I got you. I mean, to me, a crash is probably more than 25%. I think 20%. I mean, that might sound crazy. I don't think 20% is a crash, especially when you've appreciated 40% in 2 years. Just get you closer back to the trend. But I think 25, 30%. I don't know what that number is, but it's got to be 25% or higher.
Yeah, I think I'll actually agree with you on that one. It'd have to be 25 or more. And my reasoning for that is basically because we've seen so much appreciation in the last 2 years. Like we see markets that appreciated almost 20% or in the high teens year over year for 2 years straight. And a 20% in those markets is more of a correction than a crash. But say if it was a 20% reduction in prices in an area where they only saw maybe a 10% appreciation, then that's more of a crash. So it's hard to put an exact percentage out there as like, this is a crash, because it's really going to come back to, it depends on where you live and your market.
No, I agree.
Okay. Let's see. Marco says he's in Southwest Florida in Naples. Do you feel that the reason for high prices in the area was caused by excess demand and FOMO rather than lack of inventory? Well, probably neither one of us are too familiar with the Naples market, Marco, but I have been there before and I know the area a little bit. And I would say that for an area like Naples has been traditionally a pretty wealthy area well before the pandemic. And I don't think that people were really FOMOing into the market there. I think just a lot of people maybe chose to take an early retirement. You know, rich Northeasterners traditionally buy property there, and the demand is there. It has been for a long time. And I think that's probably one of the reasons for the lack of inventory, because those people know that that area is very desirable.
No, that's what I would have said. I would have said it's more the pandemic caused shifts in migration patterns that, you know, again, the Northeastern, I'm from North Carolina originally, right? We've always had Northeasterners even coming down to North Carolina in the summers to vacation and every year, right? They were either North Carolina or Florida. And so it's a big migration pattern for people in the Northeast because of the weather. And my guess would be it was more of, again, retirement happening earlier, people being able to work from home, not having to drive in every day, and therefore they want to be where the weather's warmer.
Absolutely. And I think the pandemic was a good reminder that, hey, life is too short. Let's do this now while I still can.
Agreed.
Okay. Here's a good one. Do you think housing prices will go down to what they were pre-pandemic? So pre-pandemic to me is, early 2020 or before that.
Right. I don't see it personally. In my market, that would mean prices had to drop by 35-40% for that to take place. I don't see it happening. I mean, I personally believe if you see a drop in home prices, just because, again, and I'll say the millennials and I'll say the people that have become prime buying age and all the people that are sitting on the sidelines, again, waiting, and we won't even count into investors and the Blackstones of the world and all of that. I think if you see a pullback in home prices, there are people sitting, waiting, ready to get in the market. And so I think, any drop in real house prices is met with some sort of demand, basically putting a bottom in.
Yeah. Well, I think in areas that saw these major jumps in prices over the past couple of years, I think that they could potentially return to pre-pandemic prices. It's really hard to say. It depends on a lot of things that might happen. Like I said earlier, is there going to be a recession? If there is one, how bad is it going to be? How many of those homes that were bought there in those markets that went up 20% year over year, how many of those were speculative investments or, bought by some of these institutional investors that maybe at the sign of prices going down, maybe they will decide to sell because, they don't want to lose too much money. So I think it is possible for homes to go down to pre-pandemic pricing in certain areas. Now, for example, like where Jeb lives in Huntington Beach, probably not. I doubt it, just because the inventory is extremely low still and the demand is still there. But it is going to be always local, guys. That's one thing you always have to remember. You need to pay attention to what's happening in your area, because otherwise, if you just go with, the market's crashing, well, it could be in some areas and other areas that could still be thriving.
No, agreed. Yeah, don't just read the headline. Read it, like get into the data of that area, right? I mean, demand's dropping. Okay, what does that mean? Is it dropping like, based on where it was last month? Is it dropping based on where it was last year at an all-time high? Okay, not really a big deal. I mean, we couldn't sustain those levels forever, so that's okay. You got to look at the data, read into it, not just read the headline. That's unfortunately, I think a lot of the problem at the moment is there's a lot of headlines being read without actually taking the information for what it's actually worth.
Yeah, absolutely. And that can scare people too. If they read the wrong headlines and people get too wrapped up into the news, they can make decisions that they maybe shouldn't be making.
Agreed.
Okay, here's a good one. I like this question. Do you think rent prices will go down as well if the price of homes go down as the pandemic subsides?
Hard to say. I mean, I think prices are somewhat sticky to the upside in rentals and in house prices to some extent. And what I mean by that is it's rare for prices to go to a certain level and people to be willing to go take it for less. So, right. So if you're leasing a house right now, if the landlord is renting it for $3,000 and getting $3,000 a month for 2 years, for that renter, I mean, it's a big shift in mindset for that landlord rather, to be willing to drop that rent considerably, based on what they've been receiving in the past. And traditionally, things get expensive over time. And so, year over year, the Fed shoots for 2% inflation, and we haven't been able to hit 2% inflation, forever until the pandemic rather. And so over time, things are going to get more expensive. The cost of living is one of those. So I don't think rents are going to go anywhere. Now, maybe some of the, the rentals where people have again, competing against a bunch of people and willing, again, to pay a little bit more, pay the first year up front or pay multiple months or whatever it is. Probably less of that. But there's just a lack of available housing to rent as well, at least in my market. What we have is you know, the rental market is in as high demand as the buying and selling market, and probably more so at the moment. There's just a lack of available property out there. And so what you have is not only the normal renters that are looking for rentals, you also have those people that have sold their house looking to sit on the sidelines, looking to rent something. And then what you have is people that have been renting properties for years, and the landlords come to them and said, I'm selling the house. You got to go. And guess what? Now they have to go find something to rent too. So there's a lot of demand for rentals. And so as long as there's demand, I don't really see a lot changing on that front. But it's one of those questions. It's hard to know what the future holds. I don't see much changing.
Yeah, I think also that rent prices will remain pretty high for the most part for a lot of the reasons that you just mentioned, Jeb. But if a recession comes, for example, what I saw last time when the housing market crashed in Miami, the demand for rentals actually was higher than buying a home, even though homes were cheap, because a lot of people simply couldn't afford to buy at the time because they were hit hard economically, or they just didn't have the money for the down payment, what have you. So even though home prices were low, people still had to be in a position where they needed to rent. So rent prices really didn't come down that much. And this time around, I think it's going to be pretty much the same thing. People are looking for rentals to sit on the sidelines, like Jeb said, but also, if people lose their home in a recession, they're forced to sell for some reason. They're not going to turn around and buy another home. They're going to need to rent somewhere. So that's really the main thing you have to look at, is people will be in a situation where they pretty much need to rent. And the other thing I would add to that is you see a lot of these areas where rental prices are doubling. Now, some of that might go away, especially in a recession.
Agreed.
Because, the landlord cannot rent out a property if there's nobody there to rent it for that price, regardless of supply and demand, in my opinion. I see this all the time. I see people here in Miami list properties for sale and for rent that sit on the market for a year and nobody takes it. In fact, there's one in my building right now. There's a unit for rent here for, let's say, $10,000 a month, and it's been on the market for 6 months. No one's ever going to rent that. So, when you have places like that, yeah, I think you're going to see the rent prices come down. But rent that's being charged fairly and is, keeping up with a normal increase, I don't think you're going to see those go down at all.
Yeah, no, I mean, at the moment, like I had somebody reach out to me this morning and ask a question about how much their landlord could raise the rent. So there's rent control laws here in California, and it's 5% plus area inflation or whatever. And so at the moment in LA, because we're considered part of the LA area, the inflation numbers, I don't know what the number is today, but it's in the sevens somewhere. That's 12% increase year over year. So that's a big number jump in rent payment. So that means if you're renting something $3,000 a month, I mean, that can go up, what, $360, give or take. I mean, that's, for a lot of people, that's a big jump. So I don't think those increases like that can continue. But that will come down as inflation comes down and hopefully the market normalizes a little bit.
Very good. Okay, let's take a couple more. Okay, do you think when all the hedge funds, family offices, and investors leave the market, it will create a glut in the real estate market?
I don't, my question for anybody asking that question is, when the hedge funds sell, what do they do? Right? Because now they've created this equity in a property that when they sell the property, they've got to park that money somewhere. And the one thing about real estate, it's a fixed return, it's a fixed asset. It's, they can tell you exactly how much money it's going to bring to their fund or to their investors every single month. When they sell real estate or what have you, they have to put that money somewhere. Everybody, coming out of the last housing debacle was talking about shadow inventory. And I could keep saying it for like 10 minutes because that's how many times I've heard it. There was never any shadow inventory that came to the market. All these investors that held assets, guess what? They held them and they've been renting them and they've been continuing to raise the rents. And not only have they gotten more rental money, they've gotten appreciation, and they've done fairly well. So I don't see a lot of these people selling it because, again, you've got to go put that money into something. And if you decide not to put it into something, you've got to pay a massive amount of capital gains on it. And so I don't have an answer other than that when asked that question. What are your thoughts, Michael?
My thoughts are that if you have a hedge fund, for example, that bought a bunch of real estate and they have short-term adjustable rate mortgages and they're in that situation, I think those companies are going to be looking to sell very soon. That's what I think, because otherwise, if they don't, then they're going to be getting to a point where these payments become unaffordable, even if they did create some equity in those properties. And like you said, their goal is to make money. And, if they're losing money, then they're going to sell. That's what I think that's going to happen.
So, but aren't these hedge funds buying in cash?
Right. But it's not their cash. That's borrowed cash. That's not their money. That's money that's being borrowed from, they can take loans at 2 to 3% still, whereas the average person can only get it at 6 now.
Okay. No, I mean, I'm not arguing. I'm just asking. I personally think it's a lot of cash sitting on the sidelines. And I know there's a lot of cash outside of those that are sitting on the sidelines, whether they leverage against it or not. I mean, I would imagine most of these companies do some sort of leverage, right? I mean, not just have their cash tied up. They're using it to help fund other things and continue to grow the empire, if you will. But I personally don't see that portion being a problem. But I guess time will tell.
Okay. So how about this one? Somebody asked, they're asking you, is it ever a bad time to buy? Do you think there could be a time when you should not buy real estate?
If you plan on owning a house 2 years right now, it's not a good time to buy, right? I mean, I believe that. You're reaching, again, we started off this, you're reaching real estate that is reaching, I won't say peaked prices, but peak prices in some markets. So you've got to make sure, it's the right time in your life to own a property. You should never buy a property if you don't meet the guidelines or, quote unquote guidelines that we discussed at the beginning. But no, it's not always a great time to buy a property. But I will say, as long as you have that longer time horizon, if there are bumps, you're probably going to be okay at the end of the day. I am bullish. I'm bullish real estate, right? I think that's pretty, well portrayed in any of the videos I do, any of the comments, but that doesn't mean I think real estate prices are going to go up forever. I think there are times when real estate pull back in prices and whatever, but I think that's okay. That's just part of owning real estate. It's part of anything, right? I mean, how many people are looking at their stock portfolio today thinking, crap, like I bought, Apple at 180 and now it's 140 and God, it's the end of the world. No, guess what? I'm buying Apple today. Could it go lower? Sure, it can. It probably will. It's okay. Guess what? I'll buy some more when it goes to 130. If it goes to 130, I'm not trying to bottom pick. I'm not trying to necessarily catch the falling knife, so to speak. But I also believe long-term, Apple has a lot of money. I don't even use an Apple phone. That's the best part, right? I'm an Android guy, but I believe in Apple. I believe in the product. I believe when I walk around and see everybody using it, everybody buying the new phone every time it comes out and all the accessories that go with it, I'm bullish on that, just like I am real estate. So I think it's all relative to the way you think.
Yeah, well, I definitely think that, I respect your opinion in the sense that you're very steadfast in your opinion and that, you don't let people take you down in the sense that, well, people say you're just a salesman and, he's just trying to make money. Because as long as you, basically walk the walk, and you're talking the talk, you walk the walk, and you live that lifestyle, I think that's okay. I don't think there's anything wrong with being the person that buys no matter what. Like who does that remind me of? Graham Stephan. You heard of Graham Stephan?
Yep.
Yeah, that's pretty much his advice. He always says, keep buying in, keep dollar cost averaging. That's his advice. And as long as that's what you do and that's what you believe in, I don't think there's anything wrong with that.
No, agreed. I mean, again, could I buy a property tomorrow that goes down in value? Absolutely. But for me, again, it comes down to that monthly payment. Am I comfortable with the monthly payment? I don't care what happens to the real estate. My goal, I got 3 boys. I need at least 3 pieces of real estate to be able to pass on to 3 kids who questionable whether or not they're ever going to own a property based on the way things are going. So it's for me as a parent, my job to kind of to do the work up front and be able to provide that. And that's my goal of the reasons I do the things I do.
Yeah, absolutely. Well, let me look for one more here, and let's see. Okay. This person's asked if there's a crash or not, but let's not focus on that. Let's focus on the second part of the question. Is the market at the top right now?
I think in some markets, probably. I think there's a top, but as I mentioned, earlier too, I think even in those markets, there are pockets of properties, neighborhoods that will still see appreciation. I mean, that's my belief here. I mean, I've seen property selling, excuse me, man, I'm burping over here, at prices that I'm thinking, wow, these, I mean, let's be honest, it's been absurd for quite some time. With regards to where they're selling and square foot and whatever. And I get it. It's a lack of being able to find something that they want in the price range and what have you. But with that said, those prices need to level off, because at some point you're pushing $1,000 a square foot on some of these properties. It's just, I would, in some of these neighborhoods, I'd rather I love California. I'm here for the weather. But at some point, I'd be like, yeah, I could see moving somewhere else and buying more affordable real estate, which is what some people have done because of that. So I think as a whole, has it topped? I don't know that a top, but I think you're pretty close to it if you haven't. But even with that being said, I think there are still neighborhoods, still cities, still communities that will see appreciation over the next couple of years. Depending on where you're located, depending on what you're looking for, it's going to be, if you've got something that people want, in my market, it's a single level home, around the golf course in a great community, sometimes, 3-car garage, those homes are going to fetch premiums because there's a lack of them. Right. And it's not just a lack of inventory, it's a lack of inventory and then a lack of that piece of inventory within the big picture.
Yeah. Yeah, exactly. I mean, the places that are always in the highest demand, they're always going to continue to go up in value pretty much no matter what's happening out there. I think most normal markets, for example, probably have hit the peak of where they're going to be for now. If there is going to be any appreciation in the next couple of years, it's going to be extremely minimal. But again, I still think that we are going to see prices come down in a lot of areas. That's been my opinion. And, it's been very fun exchanging our ideas here. Definitely being on a little bit.
I got a lot of supporters in the chat, man. I appreciate them being here.
Yeah, absolutely. I appreciate everybody coming and watching and, putting your questions in here. Having these conversations, especially with opposing viewpoints, is extremely important, I believe, no matter what it comes to in life, but especially now with how crazy the housing market is. So, Jeb, I really appreciate you joining me here today. Hopefully we can do it again sometime in the future.
Now, people are asking for a Q3, Q4 rehearsal or a redo. So we'll have to look at it towards the end of the year. But nevertheless, I appreciate, again, the opportunity to chat, to getting to know you a little bit. And again, thank you.
Absolutely. Thank you, everybody, for watching, and we'll see you next time.
Adios.